Let's bring in now our panel. Hightower Stephanie Link, a CNBC contributor. So is Big Technology's Alex Kantrowitz. They're both here at Post 9. It's great to have you both with us. Steph, your biggest takeaway from what you got this week as a shareholder in Amazon, as a shareholder in Meta, and now for the first time ever, a shareholder in Microsoft. Welcome.
Thank you. Well, expenses are going up, but we are also seeing substantial growth across every one of these companies. And earnings estimates after all of these reports are going higher. It's 25% of the S&P 500, these 5 companies that have reported this week. With numbers going higher, I think that's very positive for the overall index, the S&P 500. I feel really good about Amazon. I don't feel as good about Meta, but I bought some yesterday. Microsoft, as you mentioned, I added. I'm looking for opportunities because I still see the growth, and I still think the CapEx numbers that we're seeing are going to fuel the longevity of AI, right? I mean, you're going to do something like $400 billion from the big 6 companies in CapEx this year. You're going to do something like almost $600 billion next year, $700 billion the year thereafter. So you have a tailwind. I know these stocks are up a lot, Scott, but I'm looking for any opportunity to be buying.
Okay, AK. I mean, it feels to me like the reacceleration of AWS to the highest growth rate in years is the biggest takeaway of the whole week. Is that right?
I would say so, and a couple of things. First of all, don't discount Anthropic in this story. Anthropic has been a big AI partner for Amazon. There are reports that it's going to account for 2% of AWS's growth this year. They're, of course, taking billions in from other companies, from other investors, from sovereign wealth funds, and then plowing that into AWS. So that is part of the growth story here. And I think more broadly, when you think about the growth in all of cloud, you're seeing that right now after a long period of maybe these companies will make money by investing in generative AI technology, the end users, or maybe they won't. There was an MIT study recently that said 95% of people, or 95% of companies are not getting a return. Now that story is shifting. A Wharton study came out this week that said 74% of enterprises that invest in generative AI are seeing a return. If the end user can start to see a return, then this doubling of capacity that Andy Jassy is talking about is really going to pay off, and we will see sustained numbers for these data companies.
I love what we just showed you on the screen, guys. Put that back up if you wouldn't mind, please. The AWS growth by quarter is a really clear picture of the acceleration, the reacceleration that you have seen. There it is, right? It was somewhat flat, then declined, and now you have a burst higher. Do we come out of this week feeling as good as we did going in about the whole AI trade? Do we have new questions about dollars being spent versus rewards on the other side?
Okay, so dollars being spent is substantial, and that's why Meta was down so much, but they are seeing an ROI.
Everybody's
Scott.
Spending, though, right? I mean, why Meta? Because, look, Amazon is up to $125 billion for this year.
Right.
That's the most in the group. Meta 70 to 72, Alphabet 91 to 93.
Right.
Now, all of those numbers have steadily risen, but why so much the focus on Meta and the questions there when Amazon's spending a lot more?
I don't think that they get they're not being appreciated for the ROI that they've already seen from the spend that they've already done. So advertising was up 26%, impressions were up 14%, price per ad was up 10%, time spent up 5% at Facebook and Threads, and up 30% in video. You want to sell that because they're going to actually increase their spending? Obviously, they're spending to grow, and they're spending for talent. I was not happy with it. Let me tell you, the first thought out of my mind was they're raising expenses again, but it's working. So that's that one.
Is it? Are you sure it's working?
Yeah. When you grow revenues 28 or 26%, 4 percentage points better than expected. Operating margins beat as well. And I just mentioned all of the monetization part of the story. So they are monetizing. Give it a rest for a couple of days, then you add. But I added yesterday on Amazon, AWS at 20%, they were capacity constrained. They're going to double their capacity over the next 2 years. So that means you could probably see 20 to mid-20s in AWS for the next several quarters. That's the nuance to this story. And backlog was $200 billion, up 22%. They got more business wins in October than all of the third quarter. And oh, by the way, throw in retail and retail margins. That's also a positive as well.